Welcome to the Brisbane Property Podcast with your hosts Melinda and Scott Jennison.
Hello everyone and welcome back to another episode of the Brisbane Property Podcast. My name is Scott Jennison, the Acquisitions Manager here at Streamline Property Buyers, and we have Market Update, the last one of the year for 2023.
Welcome back, everybody, and I'll take the opportunity to say Merry Christmas to you all. I hope that you're all starting to wind down in preparation for the festive season. As Scott has said, this is the last market update for the year, and this will report on the data up to the end of November. We've spent a lot of time collating the data, and hopefully we'll be able to make it easy for you to interpret throughout the next 30 minutes or so.
Yes, so hopefully, as Melinda said, hopefully everyone's having a relaxing time in the lead up to Christmas, enjoying the beautiful weather and the beaches if they can get there. I'm sure that's something a lot of people have on their checklist if they up here in Brisbane or thereabouts. So let's jump into a market update. Brisbane's performed pretty well.
Yes, look, as we had expected based on what we were experiencing on the ground with that strong buyer demand and limited supply, Brisbane has continued to outperform the national average. So at the end of November, according to CoreLogic, the market's experienced the smallest monthly gains since the growth cycle commenced. However, here in Brisbane, that was not the case. Brisbane, Perth and Adelaide are bucking the national trend, and that's what we're going to talk more about in this episode, because when we do look at how Brisbane performed throughout the month of November, it's definitely still strong growth performance.
Yeah, it's definitely been strong. Month on month, we've actually seen the housing market and the unit market perform really well since early 2023. So it's not a surprise really to us that we've seen Brisbane do again in this month as well.
Yes, and some would call the market conditions a V-shaped recovery. So we've talked a lot about what happened in the latter months of 2022, where the median value for Brisbane properties fell negative 8.9% from the previous cycle peak. And that was in June 2022. Then from February 2023 through to the end of November, the growth in median values in Brisbane increased 12.2% according to CoreLogic data. So that's a really strong decline followed by a strong increase yet again. And that's what we would describe as a V-shaped recovery, and something that not a lot of people, I think, were expecting off the back of the rising interest rate environment that we had throughout the latter months of 2022.
Yeah, it didn't really have the Melbourne Cup, obviously the interest rate rise there we had, it didn't really have a major effect on Brisbane. We've seen put a bit of pressure on buyers, I guess, and obviously factoring in those increase in rate rises as well.
Yes, and when we look at that national data, it is apparent that the markets where listing volumes continued to increase over the year, those markets started to see the growth rate slow down. So the bigger markets of Sydney and Melbourne, but also Hobart and Canberra. These are the areas where we saw those listing volumes trend upward. And as a result of that, we've seen the rate of price growth stabilise. However, in the likes of Perth, Adelaide, and also here in Brisbane, from a national perspective, listings are much tighter still in these three capitals. So this is one of the reasons why these capitals are still experiencing positive month-on-month growth. And that's actually evident throughout both segments of the market, in the unit market and in the housing market.
Yeah, the listings, we did see a slight increase from October to November, increase of 3.2% from SQM research.
That's right. Yes. So meanwhile, that's new listings. So there was a little bit more for buyers to choose from in terms of those new listings that were coming to the market. Now, 3.2% is not a huge shift, but it's enough to see a small change. However, the volume of buyers was also very strong, so it was absorbed very, very quickly. However, what I will say is that the total number of listings, or the overall listing volumes, they remained relatively steady. So even though new listings increased slightly, the buyers were actually purchasing older stock as well. So the total listings, the change month on month there was 0.56%. So not really something that, we could measure very well. It's a very, very small change.
Yeah, and the obviously we're still seeing those, as you said, even though the very, very slight increase of listings, we are still seeing properties sell very fast.
That's right.
We've seen a lot of properties multi-offer still. even quite a lot of properties selling prior to auction as well. So we've seen those properties, anything that is coming to market, it's generally going off the market pretty quick.
Yeah, that's true. And look, those properties that are listed for an auction campaign, typically if they do make it all the way through to auction, we've still seen reasonably strong auction clearance rates here in Brisbane, certainly much stronger than where we typically would have seen auction clearance rates 2 or 3 years ago. So if we're looking at clearance rates, they stayed relatively consistent between last month and this month. So sitting at 63.25% right now, and it was 63% last month as well. And this is according to Apollo Auctions data. However, the average count of registered bidders increased slightly. So in October, that was 3.4 bidders per auction. However, in November, it increased slightly to 3.67 bidders per auction. So that buyer depth, or the number of buyers per property, did actually increase slightly month on month.
Dwelling values. Let's jump into the dwelling values. So we've seen an increase there of dwellings, this is Greater Brisbane, of 1.3%.
That's right, across the month of November, and that sits Brisbane in second place for dwelling value growth across the month. Out of all capital city markets, Perth was actually the leading capital city for the month. Quarterly changes in dwelling values now in Brisbane sitting at 3.9% increase, and the annual change now sitting at 10.7%. And that's all dwellings, including units, townhouses, and also houses, individual free lot homes. So the median value across all dwelling types is $779,270, and that's according to CoreLogic data.
And then if we look at PropTrack, obviously this does confuse our listeners, I think, every month when we do this, but obviously to share that data as well. The median price for PropTrack was $775. So you've got $779 and then $775 with a monthly change there of 0.2%.
Yeah, and look, that PropTrack data demonstrated the same positive dwelling growth trend month on month, and that's what we generally like to look for. They both use different hedonic regression equations to calculate the dwelling price growth month on month, which is why there's potentially those small differences in the data, but both showing the same trend of positive monthly dwelling price growth across all of Greater Brisbane.
And what segments had the biggest change?
Yes, it's really interesting because I've got a couple of months of data to report on here. So up to the end of October, it was the bottom segment of the market that had experienced the greatest growth in the preceding 3 months. So the lowest 25% of property values had increased 4.3%. The highest 25% of property values had increased 3.8%. And then the middle segment of the market, so that's the middle 50% of values, had the lowest 3-monthly growth rate, and that was sitting at 3.6%. However, now that we've included the November data, we saw a resurgence in price growth at the top end of the market throughout November. So now we've got the top end of the market, or the top 25% of property values, sitting at a quarterly growth rate of 4.1% in Brisbane. And that's now the same as the bottom 25% of property values, also sitting at 4.1% growth. And that middle 50% of property values now shifting 3.7%. So it's the top end and it's the bottom end of the market in terms of dwelling values that's moving at the fastest rate across our city of Brisbane. Remember, we're talking dwellings. So within this dwelling data, a lot of those units and townhouses may fall into the bottom 25% of those property values. And we've still seen a lot of strength in that unit market, especially in blue chip locations around the city. So this data may be being influenced by the volume of units that, make up the lower value properties as well.
I just want to jump back onto that auction. I know we talked about the numbers of registered bidders. It's gone up to 3.67 actually bidding at auctions. And I just want to mention last Saturday, both Melinda and I attended 14 auctions, I think we witnessed, and majority of them did sell. So, we did see those numbers when you're out and about, and we do get out on those busy Saturdays, to attend 14 auctions and see the action and see how many people are actually bidding, it does represent those numbers that we sort of talk about as well when you actually see it physically as well.
Yeah, it's interesting. We had a conversation with a buyer that was just sitting near us at one of the auctions, and they were really nervous, and they were asking, how many auctions had we been to, and I think that they nearly fell over when we told them how many auctions we have viewed, how many auctions we probably bid at, etc., because they were really unsure and uncertain. And I guess a shout out, anyone that is bidding at auction and needs professional assistance, please reach out to our team. We do offer an auction only bidding service. We completely take the emotion out of the process, and we can really help people to get a good result without any emotional sort of interference in that decision-making process, which is a highly anxious period of time for most bidders.
Yeah, it's an interesting one, because I was actually talking to an agent as well, and I said, it's interesting. Some people never ever bid at auction in their life. Some people maybe once or twice, and yet we went to 14 on one day. So it is a service effort to take that stress away from people as well, as you mentioned. So
managed to secure one for our clients on Saturday as well at
correct.
auction. So that's always an even better scenario when you can walk away and help buyers to find the keys to their new home.
So if we then move into, so we've gone through the dwellings, and we'll jump now into house prices.
So for the last 3 consecutive months now here in Brisbane, house price growth has remained consistent at 1.4% per month, according to CoreLogic data. So no increase in momentum, but certainly no decrease in momentum in terms of that price growth. It's putting the current median value for a house in all of Greater Brisbane at $870,526. Now, if we calculate that 1.4% growth on that median value level, that is price movement of $10,061 per month. Again, we cannot stress enough how important it is to understand this rate of market growth. If you're looking at most recent comparable sales, it's important to apply that growth figure on top so that you can come to a determination of today's values.
And yearly to date, the performance there has been 12.1% growth for that time in the median price. So, when you look at that, and we do talk about that long-term investing, that's a quick recovery from what everyone was talking about, doom and gloom at the start of the year. So, increase of 12.1%, that's amazing.
It's a big change, isn't it? Yes. Now, looking at the PropTrack data, it also confirms the same pattern, and this shows also that annual house growth or house price growth in Brisbane is also surpassing both the national and the capital city averages. So Brisbane has been one of the standout capital cities over the last 11 months, or all of the months in 2023 to date.
And unit prices, if we jump down to unit prices again, we've seen another 1% growth in the unit prices in the month, according to CoreLogic.
Yeah, absolutely. And I think it's important to note that the unit price growth in Brisbane on an annual basis is still stronger than house price growth based on CoreLogic data. That's really interesting, because we saw those unit prices hold up in value during the downturn of last year, much more so than house prices. So on an annual basis, units are still outperforming houses here in Brisbane. However, looking at the most recent monthly data, we are seeing more often than not, the house market growth has exceeded the unit market growth just in the last a few months. So that's just something to keep an eye on. The unit market is still strong, especially in those boutique apartment blocks.
And the median value for units in Greater Brisbane is now $552,332, which is an increase of $6,977 from a month ago.
Yeah. And again, we always like to quantify that growth at a median value level, because if you were shopping with a budget of $550,000 or thereabouts last month, you may now need a budget of nearly $557,000 to buy the same property based on the monthly growth rate. So it really does help to define the direction of the market and how much or how quickly the market is moving.
And PropTrack, we saw that the median price there at $580. They did show a slight decline on negative 0.29%,
across the month. Yeah, it is interesting. And again, this just comes through in at times where the data sets don't match for whatever reason. However, a very small amount of negative price growth in the unit market has been observed in that PropTrack data. It is also worth noting that On average, the unit growth in Brisbane has also surpassed the average for all other capital city markets across Australia on an annual basis as well. So both housing market and unit market outperforming the national averages in terms of growth for this year.
So the rental market, we know that it has been tight, and it's even tighter again. So the unit market, very, very tough to get properties to rent at the moment, and we've got it retracted slightly from 1% to 0.9%.
That was the vacancy rate.
Vacancy rate.
That's correct. So that was between September and October, and we've just had the November data updated, and vacancy rates have now returned to 1%. So they're hovering around that 1% mark. When we look at vacancy rates in each region, there is one particular area where we've seen quite a big uptick between October and November, and that's in the Brisbane CBD. So vacancy rates in October there were 1.4%, and they jumped to 1.9% in November. So that's actually quite a big shift. So we'll be watching that market next month just to see whether that is just a function of the time of the year. However, looking at some other regions in Beenleigh, vacancy rates still really tight, 0.7%. So they were down 0.1% across the month. East Brisbane vacancy rate sitting at 0.8%. They tightened slightly as well by 0.1% across the month. Inner Brisbane currently sitting at 1.1%. That was previously 0.9%, so an increase of 0.2% there. Ipswich, no change, 1.1%. Northern Brisbane sitting at 0.8%. So that's an increase of 0.1% from October through to November. Southeast Brisbane sitting at 0.9%, no change month on month there. And both Southern Brisbane and Western Brisbane sitting at 1.1% in both regions, and both of those regions increased by 0.1% across the month. So they were both previously sitting at a 1% vacancy rate. So really tight vacancy across most areas within Brisbane, just that inner city CBD area that has spiked between October and November. So that will be one to watch in the coming months.
And the change in the growth, what have we seen on that?
In terms of rental price growth, we've seen house rents increase 6.6% on an annual basis here in Brisbane. So because the rate of house price growth has increased by 10.6% and the rate of rent price growth has increased 6.6%, rents are now rising at a slower pace than the value of the houses themselves, and this is compressing gross rental yields across the city. So gross yields for a house in Greater Brisbane is currently sitting at 3.7%. And you'll recall when we were recording earlier in the year, those gross yields for houses were actually in excess of 4%. So you can see how they've been sliding as property values have continued to increase, and the rate of rental price growth has started to slow down.
And the unit market, well, the annual change there, we've seen that 13.2%, whereas the annual change in the price for the unit market is 11.3%.
Yes, so you've quoted there the annual change in rents for units in Brisbane. That's at 13.2%. So really strong rental price growth in that unit part of the market. And you're right, the unit price values have increased 11.3%. So because of that, the gross yields in the unit space, the gross rental yields, they should still be rising because rents are still rising at a faster pace than the value of the properties themselves. So currently, gross yields for units in Brisbane sitting at 5.2%. Tell me you can get gross yields like that in cities like Sydney and Melbourne. It's just very rarely possible. So these sorts of yields are really strong for a capital city location.
Yeah, we do get people ask about that quite a bit. So as Melinda said, gross yields for houses sitting at 3.7% and gross yields for units at 5.2%.
That's right. So, yeah, it's been a strong overall market across Brisbane yet again throughout the month of November. And we do think that there's been an inflection point at a national level in terms of what's happening in the property market. However, Brisbane has remained very, very robust, and that's evidenced by the fact that housing market has seen consistent growth for the 3 months at 1.4%. The unit market's been a bit up and down, although volumes are much lower in that segment of the market here in Brisbane. So it will be interesting to see how the coming months play out, simply because we still have that stock shortage in Brisbane and there's not a lot to buy, and yet we've got, buyers that still appear to be lining up to get through properties. And of course, the beginning of a new year, as we see happen in most cases at the beginning of the new year, that can trigger or be the trigger for buyers to make a move in the market. So, we quite often see the beginning of the year start with a high level of competition from buyers, but it will be interesting to see if that plays out again as we move into 2024.
So for those people that are sitting around on the beach listening to this podcast, they can get ready for 2024 and start to prepare. Hopefully we do get more listing numbers. Talking to a lot of agents out and about, there are properties coming. We know from some big agencies that they're going to be listing quite a few properties around the Christmas sort of period to launch them all off early in the new year. So hopefully that does come through as well.
Yes, be prepared. There's going to be a digital launch by one of the major real estate brands on the 26th of December and then again on the 1st of January. So whilst many of us may be thinking about the festive season and spending time with loved ones, for those that do want to shop on realestate.com, you will see some new properties launching on those particular days. However, very unlikely that you'll be able to get through those properties until early in the new year when the sales agents are back and those homes will be then open for inspection. So you'll see a digital launch online first, and that will be followed by the ability to inspect some of these properties in the new year. I'm not going to downplay the potential downside risks that still exist in the property market. Obviously, the interest rate hike in November, for many people, that perhaps was the rate hike that might cause them to feel the pinch. Their rates are considerably higher right now than they were 18 months ago, and it does affect affordability for some people in some areas. Consumer sentiment is also still really, really low. And then what am I trying to say? The number of people, therefore, that are confident to buy a home is impacted by these sorts of things, consumer sentiment. And it's been at an extremely low level for several months now. So it will be interesting to see how that tracks and changes as we enter the new year. But what I will say is that what does distinguish Brisbane, along with the other markets of Perth and Adelaide, is the fact that they are still experiencing month-on-month price growth and that our listing volumes do remain consistently lower. And so it is the supply and demand metrics that seem to be out of whack. And this is what is continuing to put that upward pressure on prices. So we really need to see listing volumes increase before we start to see the rate of price growth slow down. And that's something that we're always watching by looking at what becomes available, but also, how many people are turning up at open homes on weekends.
So those people, as we said, that are sitting around thinking about it, have a chat to your broker, get your finance organised. It is still affordable, Brisbane. I know we had a listener that sent us a comment in the other day saying, the unit market is obviously more of affordable price bracket for some people. But with those yields that we talked about, 5.2% gross yields, it's not a bad little market to be into as well, and quite affordable for the people that want to get into that market. So when you're finished on the beach, ring your broker and get them to do some work early on and get prepared for the new year.
Their broker will be on holidays, so maybe they'll have to wait until the new year to get the broker to do the work. We'll say if you've been in the market in the last couple of weeks in the lead up to Christmas, you will have noticed that the volume of listings has been falling as many of the agents are starting to relax and unwind and take a well-earned break over the Christmas period. Certainly from our team, we also will be taking a well-earned break. For those clients that are still in search with us, should we be contacted by an agent with an amazing off-market opportunity, you will be hearing from us. Of course, that is the service that we provide, but otherwise we will be back helping all of our clients from the new year to find their new homes and investment properties across our city.
And also that auction bidding, as you mentioned, if people are interested, reach out and have a chat. We're always happy to talk to people. It doesn't cost anything to talk to us. That's about it. I think a market update's done. The last one for 2023. Big shout out to everyone. Thank you, everyone, for helping behind the scenes with our podcast and getting organised, and obviously Melinda's research as well. a little bit more detailed than mine, I would probably guess that it is. So I wish everyone a very Merry Christmas. Enjoy your time with family and friends. Have a lot of fun. Stay safe. And we really look forward to chatting again soon. So Take care. Merry Christmas. Take care, and bye for now.
Thank you once again for joining us on the Brisbane Property Podcast. Merry Christmas from Scott and myself to you and to your family. We wish you a very happy and safe holiday period. And throughout the Christmas and New Year break, we will be continuing to bring you our weekly episodes, and you'll still be hearing our voice every single week should you choose to download any of our episodes. So until next week, have a Merry Christmas. Stay safe, and bye for now.